Contact Zaya and the Last Dragon is going to go up in theaters and on Disney Plus for a premium, a $30 purchase on the same day. So they're testing that model. They're putting a Tom Hanks Pinocchio movie direct to Disney Plus. So they're trying a lot of different things, but they're very clearly not saying everything's going to the streaming service day and date with the movie release, theater release. So it's a different approach. It's more nuanced, and it gives the theaters some hope.
Yeah, exactly. Good stuff.
Good stuff. 10 Star Wars series spin-offs and 10 Marvel series that will debut on Disney+.
I know. Family members.
It's what we want.
I have a baby brother, man. He's just going to be like all into that.
Look, as long as they continue to have The Mandalorian, I'm going to keep paying for Disney+.
You're going to be paying for it for a long time with your
right.
son, 2
point.
years old.
Yeah.
You'll be paying for it for a long time. Chris Palmieri, thank you so much. LA Bureau Chief at Bloomberg News on the phone from LA. Check him out at Chris Palmieri on Twitter. I mean, listen, the Disney story, I'm just fascinated by the company and the strategy.
Those acquisitions of Lucasfilm and Pixar and Marvel, I mean, those were brilliant then and even looking more brilliant now.
Yep, and they just kind of, the strategy, they just move it around the platforms. All right, let's get back to world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. The FDA is reportedly intending to approve a coronavirus vaccine for emergency use by tonight. The New York Times cites sources who say regulators are rushing to finish the paperwork needed, including instructions to medical professionals on how to administer the Pfizer-BioNTech vaccine. The Washington Post is also reporting that the FDA commissioner has been told if authorization does not come by tonight, he'll need to submit his resignation. The Senate has passed a stopgap spending bill to prevent a government shutdown at midnight. The deadline has now been pushed off to December 18th so they can attach a new stimulus proposal to that bill. But as Bloomberg's Irv Chapman reports, the lawmakers are still at odds on relief, specifically whether to shield companies from virus-related lawsuits.
Republican leader Mitch McConnell has insisted on such a provision through months of talks.
They're threatening to kill any compromise whatsoever unless Congress leaves small businesses, universities, and healthcare workers as sitting ducks for frivolous lawsuits.
Democratic leader Chuck Schumer.
The Republican leader has demanded a partisan poison pill, an unconscionable position. No relief for the American people unless corporations receive blanket immunity from lawsuits.
Schumer said there have been only 23 such lawsuits all year. In Washington, Irv Chapman, Bloomberg Radio.
President-elect Joe Biden this afternoon is introducing several more nominees for top positions in his administration. Dennis McDonough is his pick to be the Secretary of Veterans Affairs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic of Bloomberg Quick Take. So we did mention, we just did see, actually, let me just bring it up. Headline crossing the Bloomberg has to do with California reporting a record 35,468 new virus cases. Those numbers, we've been talking to people out on the West Coast and talking about, being in shutdown, and it's not easy.
Yeah, it's where my parents are. They're in one of the areas where the hospitals are not full yet, but they're sort of being included with Los Angeles, which is under stricter lockdown measures.
Yeah.
I mean, look, they've been really safe about this from the beginning, and they're in positions to be lucky to be able to do that.
Yeah.
But at the same time, I mean, when we think about the number 35,000, that's like a nationwide number that we were seeing early on in this pandemic, now coming from one single state.
That's what's pretty phenomenal. And it makes me, I look at that number, Tim, and I'm thinking, okay, so how many of that results in really severe cases that ultimately end up in hospitals that are already being some of them being, really stressed at this point, and then, how many ultimately then, end up in deaths in terms of raising that number, that overall number that we see in the country.
And I think
sobering.
It is totally sobering. And as we learned from Thanksgiving, we are still traveling for Thanksgiving. I mean, we are not, but Americans are. And that means they're likely going to still travel for Christmas, even though we're seeing the effects of that right now.
Yeah.
So this number could get worse.
And have gatherings of family. And I understand it's really, really hard. I keep talking to have conversations with my colleagues and everybody around here, and they're like, I'm done, I'm tired, and it's just really hard. I just want to mention real briefly, this was out from the Journal, and it's been out there, a study published last week in mid-December. It suggested that the new coronavirus had infected some people in the United States weeks before public health authorities had confirmed the first case. So surprising, but, so saying that we maybe had some cases out there in December.
Yeah, meaning this has been here in the U.S. for a year at this point.
Yeah, and it makes sense. I think it just wasn't at that point. There must have been, we know that there were cases floating out there.
Yeah, there certainly were. And I wonder how this will change moving forward, the way we treat this type of thing, because it's bound to happen again.
Right, or if we see it in another country that will just quickly go into kind of lockdown much earlier.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Disney pushes the Dow higher, S&P lower, little change. NASDAQ down 44 now, a drop of 0.4%. Stocks have paired losses as lawmakers pass a stopgap spending bill to head off a federal government shutdown, but they gave no signals of an imminent stimulus deal. It has been a volatile session. The S&P down 6, down 0.2%. The Dow higher, as I mentioned, up 46 now, higher by just about 0.2%. 1%. It is back above the 30,000 level at 30,045. NASDAQ, though, down 43, down by 0.3%. The NASDAQ 100 index also down by 0.3%. 10-year up 3/32, 10-year yield 0.89%. Gold up 0.1%. At 18.38 the ounce. Crude West Texas Intermediate down 0.3%, 46.66 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And Tim, this story I noticed, it's been among the most read on the Bloomberg. It's about a group of guys, traders, who rode the crash in oil prices, and as a result, they made hundreds of millions of dollars. Not too shabby.
It's all about what happened on April 20th. I remember that day where I was, because this was just mind-bending what happened, right?
Because oil prices went negative.
Oil prices crashing, going to negative, essentially requiring that people pay you to take oil off your hands. Or you paid people, rather.
Right.
To take the oil off your hands.
Right. It just didn't make sense for anybody who's been following the financial markets. This story is reported for Bloomberg Business Week, and here to tell us about the guys and the ride is Bloomberg Business Week editor Joel Weber on the Access Line in Brooklyn. It's written by Liam Vaughn, senior reporter at Bloomberg News. And Joel, let's kick it off with you. This is like one of those stories that I feel like, again, you could make a movie out of it.
Yeah, well, it's what we try to do. And this was one that, Liam has been close to for a while. And, we reported in Business Week back over the summer, actually, when we found out the details of the trade. And it was more than 500 million, and now it turns out it's even more than that. It's $660 million profit. And what we've also learned in that time is what makes this story so special. And it becomes almost a character portrait of the group of guys who were behind the trade. And we know very little about them, but what we do know is all in the story. And it's this little group of guys in Essex, England.
Paul Cummins. I feel like it's just, like as I said, you can just kind of, you just want to pull out his story because
well, you need to call him by his name, his name, which is part of the joy of the story. Is that the cast of characters. It's almost like a Guy Ritchie film, and it's a really tight knit crew, and the character that you mentioned goes by Cuddles, or that's how he's affectionately known within the group.
Somehow I feel like he's not cuddly.
Can't make this stuff up.
Well, and then there's another guy named Dog, right?
Yep, Dog, and that was part of the charm of the story. Was that we as we found out a little bit about the details, we tried to kind of bring them all to light. And the fact that the other element of the story that I just find totally fascinating is Cuddles actually really does know oil. He's been in the trenches for decades now. Yeah. But some of these other people don't. They're in their 20s. Yeah. And basically it's this ring of characters who sort of know each other, and that's all they know. And they've kind of grown up with each other and have learned the oil trade. And that's kind of, they're almost like novices in that they probably don't have that much experience. Right. And yet they had a heck of a day on April 20th.
Well, and this is one of those stories, like, as Tim was talking about, Joel, like when it happened, we're all thinking, okay, first of all, this makes no sense. Negative, we're all getting used to negative rates, but this whole idea of negative oil prices and what it meant. And the thing is, it happened and then it went away. But as people wanted to kind of understand the trade that day and how it happened, that's where investigators in the U.S. and I guess elsewhere really started looking into to try and understand how did this happen, and that's what really led them to this Gang of Nine.
Yeah, we don't really have visibility into where any sort of investigation or where that stuff could go. But what we do know is that the trade is, some of these details were ones that we were able to report on earlier, but then even learn a little bit more of for this story. It comes down to TAS, T-A-S. Right. And it's also known as "quote unquote" banging the close. Right. And
trade at settlement, right? Trade at settlement.
Trade at settlement, exactly. Yeah. And there is a little bit of understanding within the community that this is not anything nefarious or illegal. It's been practiced for years, especially back in the commodities glory days, and that's kind of where Cuddles, as he goes by, perfected this. And so we think that they basically were able to do that during the close, really take advantages of the price going negative. There is some speculation or interest in it, whether or not they actually pushed it negative just through their own trading activity, but that's not for us to say. But yeah, when you look back on the course of this year, we've seen so many incredible things, so many weird circumstances that, even that day, a negative oil remains one of the weirdest things. And yet, this crew is responsible for perhaps maybe the trade of the year, I think.
Yeah, and I guess my question would be, even though it was such an anomaly to see oil do this and crash like this in a day, is this trade still possible in the future? Or by shining a light on it like this, does it sort of decrease the opportunity that people can do this?
It's hard to know. I think in many ways this was a perfect alignment where we had a coronavirus and supply and demand things. So we had oil already come down, and then all of this coincided basically with this one day that happens every month with oil where the contracts roll over. So we even thought maybe the following month there could be a repeat because we were still on lockdown right then and demand had evaporated. So who knows? I do think, one thing we know about finance is that weird things happen. There are glitches. No one thought the prices could ever go negative until there were started to be warnings like days before that it was possible. So I think it took a special alignment, and when you kind of actually read the story closely, it seems like they knew what they were doing and everything happened to align just right.
Well, and to be fair and to be fully transparent, no authorities have accused Vega Capital or any of the traders referenced in this story on doing anything illegal. And I love the law firm, I guess, that represents 8 of the 9 traders in this group, Joel. The quote is, each of our clients regularly puts his own money at risk to try to make a profit. Sometimes it works, sometimes it doesn't. And Liam even includes in his story that, if they'd made maybe $7 million that day, nobody would have maybe really, okay, whatever. But it was just, they made almost $700 million. And so authorities, they had to take a look.
And maybe they don't.
Yeah, I think, that's
again.
Yeah, exactly.
Yeah, I think, that last note of the story is another trader who says, look, if it was BP or Goldman Sachs, nobody would be saying anything. But the fact that these are, working class lads in a neighborhood like Essex, which is basically the equivalent of New Jersey for Americans.
Hey! All right, close this.
There you go. Got your attention. So there you go. But yeah,
maybe it was just a great trade. Maybe it was just a great trade.
Exactly. So that's what got people talking about it. The fact that these aren't. It's not a firm that everybody knows. It's just some guys who had a great day.
I'd like you up to then, Joel Weber. Have a good weekend. You told it well. Everybody should check it out. Joel Weber, editor of Bloomberg Business Week, on the
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, December 11th. Volatile session, mixed day, little change right now for the Dow. It is up by less than 0.1%. Right to the numbers. I'll give you the why in a moment here. We have got the S&P lower by 9, down 0.3%. NASDAQ is now down 52 points, a drop there of 0.4%. Bottom line has been a choppy session. Stocks have pared losses as lawmakers pass a stopgap spending bill to avert a federal government shutdown, but gave no signals of an imminent stimulus deal. Again, we've got the S&P lower by 0.3%. 10-year up 4.30 seconds. 10-year yield now is 0.89%. Gold up 0.1%. 18.38 the ounce, and West Texas Intermediate crude down 0.4%. WTI 46.60 a barrel. Brent, by the way, back above $50 a barrel, barely 50.01 right now on Brent. Well, as for the economic outlook globally and here in the United States, Frances Donald is global chief economist at Manulife Asset Management. She was interviewed this morning on Bloomberg Television and Radio.
We are heading into a very soft patch, something that looks like a double dip on the services component of the economy. I agree with Bloomberg Economics. There is a better than likely chance that we see a negative print on the December payroll.
Deutsche Bank has downgraded its view on airline stocks, writing that while it still had a bullish view of the group over the long term, the sector looks fairly valued following a recent rally. We're seeing a sell-off in the group today. UAL down 2.5%, American Airlines lower by 5%, Southwest Airlines down 2.2%, and Delta lower now by 2.2%. A day after its IPO, Airbnb now lower by 4%. We've got DoorDash down today by 7.2%. Stephen Hahn, head of the U.S. Food and Drug Administration, is disputing a report that he'd been told to step down if the agency doesn't authorize Pfizer's COVID-19 vaccine today, saying the regulator is working quickly on the clearance. Pfizer down 1.5%. Recapping, S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer on Bloomberg Radio.
All right, so tough story once again of our day, of our week, of our year, no doubt about it, is everything and anything to do with the coronavirus and vaccine. Charlie Pellet just talking about the story that we've seen came out of the Washington Post that the White House Chief of Staff, Mark Meadows, telling Stephen Hahn, the commissioner of the FDA, to submit his recognition, but Hahn saying, no, that's not likely, right, or not happening.
Yeah, that's what Hahn is responding. And look, I think it raises, if this story indeed turns out to be true, I mean, it's a Washington Post story.
Correct.
It doesn't help confidence in the vaccine.
No.
At a time when Americans are concerned that it's been rushed through.
Exactly. And let's get into that with our next guest, Dr. Ian Lustbader, with us as he is always every Friday. He's Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York on a day when global cases exceed 69.7 million, deaths surpassing 1.59 million. Dr. Lustbader, nice to have you back with Tim and myself. How are you?
Okay, doing well. Thank you, Carol and Tim. Happy Friday.
Yeah, you sound a little tired.
Well, it's been a long week. It's been a busy week, and but I think we have good news coming. I think within the next few days, I think we are going to get FDA approval.
Yeah.
The Vaccine Advisory Committee, 17-4, voted, to approve this authorization. And I think literally within the next few days, we'll get the full FDA committee to approve it.
Hey, Ian, hang on. I want to get to that, but I do want to get to that headline that it looks like the Washington Post they were reporting that the White House was threatening the FDA chief to basically leave
approve it or else.
Yeah. No way to mince meat here. So, what does that do? And Tim brought up a really good point. What does that do to confidence in the process, especially for the American public, when there are still many out there, it's safe to say, that are a little nervous about taking the vaccine?
There are, and even some physicians I know are a little hesitant. I don't think politically or scientifically that was good. I mean, you have to let the FDA evaluate it, which they did. The vaccine data is very good in terms of efficacy and hopefully lives to be saved. And side effects are low, not zero. So to me, it's certainly unnecessary to threaten or cajole the FDA, and we really should sort of stay out of that scientific realm. So I think that was an error in judgment, and I think unnecessary, because the FDA is going to do, no matter what, the right thing. I don't think they're really subject to political pressure anyway, because these are committees and they're composed of infectious disease specialists and heads of departments and
people who know what they're doing.
Well, Doctor, what would you say to someone who is seeing the news from the UK this week and understanding that people in the UK are already getting shots of Pfizer-BioNTech vaccine, an American company, Pfizer at least, and not getting shots here in the US? I mean, what light can you shed on the FDA approval process as to why it is taking a few more days to get it approved here?
Well, it is really just a difference of a few days, and I think this is not like the space race where you have to be the first one on the moon. I think we've had an amazing, under a year to get a vaccine is really unheard of. I think Warp Speed did an amazing job. And I think the FDA, or at least the way we work here, is that it goes through several committees. And it was 8 hours plus of discussion on the vaccine advisory committee. They had lots of different opinions. You can listen to it if you want on YouTube. I think it's a long series, and they really weighed out the pros and cons. That's just how we do it here, and I think people should feel confident about that, because really leading experts reviewed the data. They went over it. This was not a rush judgment in any way. I'm not saying the UK was a rush judgment.
Yeah.
Maybe their committees worked faster. Maybe they started a few days earlier. But I think we're going to start giving out the first vaccines. My bet is later next week.
Wow. And that's when you anticipate coming to NYU Langone, that you guys start to get it?
I do. Yeah. I think the FDA sometime in the next 2, 3 days, 4 days will formally approve it, I think, based on all the data. And I think it will be ready to ship by midweek if all goes well. And I think the first vaccines probably will be later next week or early the week after is my guess. I have no inside information, but that's my guess as to the timeline.
Do you think the rollout from the recommendations from the CDC about making sure frontline workers, healthcare workers, and those who are most at risk, this is the right way to distribute the vaccine?
I do. Unfortunately, we literally see multiple COVID patients every day. Fortunately, the volume in the hospital, at least in our area, is ticking up, but not massively. And I think the frontline healthcare workers are the most at risk, elderly at the most at risk, and then the rest of the population. And I think once some people see that we took it and that we're doing fine, they'll be more encouraged to take it as well.
That's a really good point.
Yeah.
When they see the doctors taking it.
Totally, right? And what I do wonder, too, is Sanofi and GlaxoSmithKline, they delayed some advanced trials of their experimental COVID-19 shot. I guess it didn't produce a strong enough response in some older people. So that their drugs are being pushed out maybe in terms of availability to the end of next year. I mean, Ian, this is what we're going to see, but that does complicate potentially getting vaccines to the entire world, correct? We need all of these companies to have success.
We do. Manufacturing vaccines is not easy. There are a lot of limiting steps, and I think we need multiple vaccines. Again, the data that I've seen preliminarily, at least with Pfizer, Moderna, AstraZeneca, is that, again, playing with a dose a little bit, that we're getting into the 90% efficacy, which is great. Again, flu shots, not even that strong, and they're mandatory in many medical institutions. They may be 20, 30, 40% effective.
Right.
So we do need a lot of companies. And then when you start getting out into Africa or other countries where they don't have infrastructure, you really need vaccines that need to be transported without such critical conditions of, minus sub-zero temperatures. So in a way, it's good that perhaps more Western countries who have the technology are getting it first. Right. It's great that Pfizer's coming out, but we need all those companies.
Yeah, sit tight for a second, Ian. We're going to come back to you in just a second. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center. We'll get back to him. He's on the phone here in New York City. Right now, though, we do need to get back to world and national news. For that, once again, Nancy Lyons in our 99.1 newsroom in D.C. Hi, Nancy.
Hey, Carol. FDA Commissioner Stephen Hahn is denying a Washington Post report that he was asked to resign if the Pfizer vaccine does not receive FDA approval by tonight. He will only say he was asked to continue working expeditiously. U.S. Marshals are standing by to protect shipments of the Pfizer vaccine once it does get approval from the FDA. Health and Human Services Secretary Alex Azar tells Good Morning America people could start getting the vaccine as soon as next week.
The FDA informed Pfizer that they do intend to proceed towards an authorization for their vaccine. So in the next couple of days, probably, as we work to negotiate with Pfizer the information doctors need to prescribe it appropriately, we should be seeing the authorization of this first vaccine.
Those overseeing the deployment of vaccines say the pace of inoculations may reach 20 million people in December, rising to 30 million in January, 50 million in February. No deal yet on more coronavirus relief funding following a new offer from Republicans this morning. Majority Leader Mitch McConnell is now offering to compromise on the Republican push for protecting businesses and schools from lawsuits over COVID outbreaks. That's if Democrats budge on their push for aid to states. Minority Leader Chuck Schumer is poking holes in that offer.
There is broad bipartisan support for state and local aid. It's not a Democratic demand. Many Republicans support it, too.
The two sides are closing in on an agreement for a $900 billion figure for the next round, but there's still no sign they can reach a deal on other measures anytime soon. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, thank you so much, Nancy. Appreciate that update. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And what we love here at Bloomberg is really reaching out to folks that are running different kinds of firms, and especially some of the deal makers who are seeing maybe some of the trends to come. And our Eric Schatzker of Bloomberg News caught up with Ken Moelis. He's the chairman and CEO of Moelis & Company for a Bloomberg Front Row interview. And here's what he had to say about some of the changes, some of the strategies, and some of the trends that we're seeing right now and whether or not they stick. Check it out.
It accelerated trends. I've heard, people talk about accelerating trends from anywhere from 3 to 10 years that were already in cycle. But we're seeing that across the spectrum of businesses, including our own. The energy and the intellectual capacity that was put out, and really what now is happening in business, where almost every single enterprise, every single boardroom, every single executive is rethinking their business model and is trying to change and adapt rather quickly to survive what is a rapidly changing world.
It's interesting. And that was Ken Moelis, Chairman and Chief Executive Officer of Moelis & Company. They do a lot of deals and just talking about the changes. But Tim, you mentioned earlier about Disney being kind of, Harvard Business School case study. And I do think about what will be written out of this time, just like the financial crisis, all the things, the changes that came into effect. But I do think this is a time where how we work, how we look at industries, the role of digital, and platforms, just how our world changes and what sticks. I think everybody's looking at their industries right now.
Yeah, I think so. And I think the surprising thing to hear is that this is from the world of finance and not the world of tech, right? Mm-hmm. And as Eric points out in his article, Moelis gave his bankers the blessing to essentially move wherever they want. And a few months ago, we were talking about this story with Twitter and with other tech companies where it sort of, made sense. And there was, Silicon Valley is not New York City in finance, but there are some corollaries there. And I wonder to what extent this will be permanent or signal that other banks and bankers will allow their employees to do the same.
Yeah, it's exactly. And he says Moelis & Company hasn't decided where it might add space to accommodate deal makers, but they are definitely open to options. So check it out. More at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Disney leads the Dow higher, S&P, NASDAQ, both in retreat. Choppy session. Let's get right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading well off of session lows. And like you said, Disney driving the gains in the Dow. Dow's currently up 57 points. S&Ps are down 3. NASDAQ declines by 32. The U.S. 10 yield at 0.9%. Gold and oil are both little changed. Transports are also little changed. And among the main 11 SP sectors, telecom, consumer staples, and industrials were in the green, while financials and energy are under pressure. Leaders to the upside in the Dow, Disney gained 14% to a record after giving streaming guidance. Goldman Sachs and American Express led to the downside. After earnings, Lululemon fell 7%. And in other news, McConnell said Democrats should stop insisting on state aid, and Azar sees enough vaccines for every American in the second quarter. In deal news, State Street is set to weigh options for its asset management unit. And wrapping things up, Qualcomm plunged 8% amid reports Apple plans its own modem. Live from the first breaking news desk, Bill Maloney. Charlie.
Okay, we thank you very much, Bill. He covered it all. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you to Charlie Pellet. You are listening to Bloomberg Business Week Radio. I'm Tim Stenbeck, joined by Carol Massar. And let's get back to our guest, Dr. Ian Lustbader. He's a clinical associate professor of medicine at NYU Langone Medical Center. He joins us now on the phone from here in New York City. Doctor, I want to get to this news that we learned earlier today from Governor Cuomo, saying that indoor dining here in New York City is set to close on Monday. Is this, in your opinion, the right move?
Well, that's a good question. You know, I think everyone is trying to make their best judgments all the way around. We do expect a bit of a bump, a surge in cases after Thanksgiving, and probably, around the holidays in December as well. Certainly, we know outdoor dining is fine. I think it's a tough call to really restrict indoor dining. I think what happened is that it was hard to sort of, that 25% is a reasonable number, but I think there have been a number of infections people have had from dining out. So I can understand it. The poor restaurants have been under strain. The whole industries are under strain. But I think I have to agree, at least temporarily, for a short window, to perhaps let case volume drop a bit. I think it should be reevaluated probably on a weekly basis, because if positivity rates come down, they should be reopened. I can tell you it's a tough time. By next summer, we are not going to be wearing masks. Most Americans will have a vaccine, and we will look back on this, but it is going to be a rough few weeks.
I wish we could take a time machine and get there.
Yeah, and move ahead.
Yeah.
Hey, there's a headline out from ABC that Dr. Anthony Fauci says he will get vaccinated publicly. So Charlie Pellet just sharing that with me. So, yeah, I mean, listen, I think he understands. So many people understand. And we were talking, Ian, that, by you and other members of the medical community getting the vaccine, I think that is going to really provide incredible reassurances to the mass public.
I'm hoping by next Friday, when we do another medical segment, that I will have had it by then.
Yeah.
So I will let you know if I did and how I feel.
Well, and look forward to, go ahead, Tim.
Yeah, I mean, one thing I want to know is what it feels like to get a shot of something that's stored at negative 70 degrees into your arm, right? I mean, that's got it. You can feel that, right?
For sure. It's a deep IM injection. It's got these lipid particles that protect the messenger RNA. Yeah, it's a unique vaccine. It's a new vaccine. I'll let you know how it feels if I get it before Friday.
Well, we look forward to that. Hey, Ian, I do want to ask you too. What are you seeing when it comes to COVID cases in New York City?
We're definitely seeing a slight increase.
Okay.
The hospitals are also seeing an increase, nowhere near March. I suspect part of what we're seeing is the positivity. In other words, we're estimating at 20 or over 20%, at least of the New York City population, has antibodies. So I think that may be moderating it a bit. Right. And when the vaccine starts rolling out, there is some protection after the first shot. We don't really know how much, and we certainly know many vaccines, like the shingles vaccine, pneumonia vaccine, you really need 2 shots for optimal antibodies. But I think there's some data that there will be protection after 1 shot. So I really think in the next few weeks we will at least have some good news coming along. But cases are up a little bit, and I think that probably factored into Governor Cuomo's decision about restaurants. But we got to hang in there a few more weeks, and I think we'll begin to see a little more daylight.
Yeah, fingers crossed here. The other thing, though, that is still tricky, right, that you can get the vaccine, and so you are essentially protected, but you still don't know. You can still, though, potentially spread the virus. Is that correct? Help me understand that.
Well, yeah, you're a very good point. You're on the cutting edge with nuances. So there's some rationale about people who've had it wearing a mask. In other words, you've had antibodies, you had COVID, you survived. Should you wear a mask? And, we feel that it does make sense for a while. And that's probably true of the vaccine. There may be some carriage of the virus in nasal passages. I think that's a relatively low risk. And I think it's not going to be meaningful. I think most physicians plan to wear masks even after they get the vaccine, as they're seeing patients really for a few months until we really see a drop in cases. And I think part of that is cosmetic. I think it looks good. And probably there's some protection. But once you have antibodies, generally they will go everywhere, including to the nose where there's a virus. There's some thought that there'll be fewer antibodies in the nose and you could harbor it or potentially infect other people. I think it's a theoretical risk, but a relatively low risk.
Doctor, we don't have much time left, but what message do you have for people who may be putting off going to the doctor because they're worried about being exposed to the virus? Are medical offices doing a safe, are protecting people?
Great point, Kim. Thank you. Great point. People need to come in for their screening, testing, colonoscopy, mammograms, vaccines, flu shots. The offices are safe. There's social distancing. Everyone wears masks. Many offices have air purifiers. I just went to my dentist, and they have ultraviolet air purifiers. So we need to be less afraid. Get out there and get your baseline health care done. And avoid crowds inside. You may need to take a little break from restaurants, but I think the doctor's offices are relatively safe, and it's important to get your screening health care. Thank you, Tim.
I got to say, I got a root canal. I've been in and out of doctor's offices doing
I got to go to the
routine
dentist.
screening. They have been incredible. So, yes, you do need to go to the dentist.
All right,
I mean,
next
not
week.
for anything else, but you just got to take care of your teeth.
What are you telling me?
All right, Dr. Ian Lustbader, stay safe, be well, Clinical Associate Professor of Medicine, NYU Langone. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I need a song that says, I'm done, because I am.
Are you, even though it's not quite time to go?
There's 2.5 hours at least for me to go.
Yeah, that's true.
But we are going to get a song from Dave Wilson. We're also going to get the chart of the day, so we'll see what we get.
It's like
you're doing better. You're doing better.
Okay, well, people who are listening are like getting in touch with me, telling me I'm pathetic, but
baby steps, baby
steps. That's right.
All right, let's get back to Charlie Pellet with a check on that trading day. 29 minutes to go, and then we wrap up the week, Charlie.
Exactly, and we are looking at a mixed Friday right here, on track for a losing week, Carol. But the S&P down 6 now, a drop there of 0.2%. The Dow advancing 33 points. A lot of that has to do with the Walt Disney Company. Disney shares, by the way, surging to a record. This on more streaming. We've got Disney up now by 13.9%. For the Dow, it represents a gain today of 0.1%. NASDAQ, though, slumping 35, down 0.3%. The NASDAQ 100 index also down by 0.3%. Dow Transports higher, little changed, up by less than 0.1%. We've got the 10-year up 430 seconds. 10-year yield 0.89% this Friday afternoon. Gold up 0.1%, 18.38 the ounce, and West Texas Intermediate crude retreating by 0.4%, 46.60 a barrel. Stocks have paired losses as lawmakers pass a stopgap spending bill to avert a federal government slowdown that gave no signals of an imminent stimulus deal. Bottom line, though, volatile session again. Recapping here, S&P down 4, a drop now of 0.1%. The FDA says it is working toward rapid emergency use authorization of Pfizer's COVID-19 vaccine that was backed yesterday by a panel of agency advisors. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television.
The FDA hearing yesterday went extremely well. They plan to roll out the vaccine in frontline healthcare workers and in residents, elderly residents in communities, is all in place. But the vaccine supply is going to come through in a measured manner, and it really won't be widespread distribution for some time now. We have to do something now to make a dent in the cases. We can't wait for the vaccine to come by and do that.
And Pekosh says that something now is wearing masks. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares down 1.4%. BioNTech, it is trading lower now by 1.7%. Again, recapping, equities trading mixed. S&P down 5, a drop there of 0.2%. Bring on the song of the day, because that is a Bloomberg Business Flash.
Thank you so much, Charlie. You are listening to Bloomberg Business Week, and this morning shows did like a piece on her, and it's really, really harsh.
But, I figured yesterday, Bruce, yes. Tim got what he wanted.
Did you know Linda Ronstadt?
I know of Linda Ronstadt.
Would you have guessed that?
No. But at least I'm being honest.
I'm not trying to be hard on you.
At least I'm being honest, right?
Yes, I like honesty. We all like honesty. All right, Dave, so make the connection for us.
Well, it's a long, long time when it comes to looking at earnings and S&P 500 valuation. I came across this chart earlier in the week that Jeff Gunlack over at Double Line Capital included in one of his investor presentations, which he does periodically. And it got my attention because it was something that I hadn't really thought about before. Usually when we talk about what are called forward earnings, you look ahead 12 months, see what the analysts are predicting, and then you can come up with the valuation from there, a forward price earnings ratio, if you will. Now, what he focused on in this particular chart was a 24-month ratio. So in other words, looking ahead 2 years, and the calculation involves what's called a blending. So you get a little bit of the first year, a little bit of the second year, and you use that as an alternative in order to figure out whether stocks are cheap or expensive. Now, he kind of poo-pooed the indicator because, analysts have trouble coming up with reasonable estimates for a quarter. How can you go out 2 years? Nonetheless, what I found interesting is that, if you look at where we are now or have been lately in a historical context, it makes stocks look even more expensive in relative terms. Here's what I mean.
Right.
Beginning of September, we saw the S&P 500 at 27.2 times 24-month forward earnings, and it had never been that high, at least in our 3 decades of data. You go back to the late 90s, it was right around 27 at its peak, and here we are now, it's at something like 26. Now, people will differ on the exact numbers, but the message is something that you don't get out of looking at just 12 months worth of earnings estimates, nor do you get it out of looking at historical earnings. So either way, we're not quite at the peaks that we were in the late 90s going into 2000.
Is there going to be a test on this when we're done? I'm getting a little nervous, Dave.
Why is that?
I don't know, because you're being very methodical and going through it. I'm afraid that there's going to be a test when I'm done, like the Bloomberg quiz that comes out on Thursdays.
Hardly. The quiz is done once we get through the song, all right?
All right.
This is more a matter of just kind of understanding where we are.
Okay.
And that's really where Gunlack kind of, came from in terms of including this indicator.
Yep.
He's concerned that stocks are expensive. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I just guess, it just depends, Dave, right? What kind of year we ultimately get. If we start to see growth take off, like maybe some of these valuations for the S&P ultimately make sense. Because I do feel like 1990 is always one of those things that sets off an alarm that it was very different, Tim, right, in terms of what we saw in the market.
Yeah, I think when you see IPOs like we saw this week, everyone loves to compare to what we saw in the 90s, but they say it's different.
Dave, it's different?
Well, it is and it isn't. I mean, you're dealing with bigger companies and not quite the magnitude of the gains that you saw back then. But as far as where we are now, one thing you got to keep in mind is, the economy could do a whole lot better than analysts are anticipating, and earnings could be higher, and therefore that would bring the ratio down.
Exactly. Favorite Linda Ronstadt song?
Oh, God, there's so many choices.
Just give me one.
I do kind of like that one.
Yeah,
sure.
I like I Can't Let Go. It's a great little song.
Yeah.
Tim, you got a favorite?
Not right now.
All right.
I'll think about it during the break. How's that?
He's going to get back to us. Dave Wilson's going to also get back to us a little bit later on. He's got his stock of the day. That's coming up in just about 20 minutes time. All right, you're listening to Bloomberg Business Week. Let's get back to world and national news, and let's get back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President-elect Joe Biden says he is thankful a vaccine is coming, but the nation is in the teeth of a coronavirus pandemic and needs a leader.
This nation needs presidential leadership right now. Presidential leadership that is willing to model the steps we should be taking to save our own lives and lives of our families.
Biden noted with daily death rates now of 3,000, we're seeing more people die every day than 9/11 or Pearl Harbor. The Texas lawsuit asking the U.S. Supreme Court to invalidate President-elect Biden's victory has quickly become a conservative litmus test. So far, 126 members of Congress and multiple state attorneys general have signed on to the case, though many court watchers say it's likely to fail. Texas wants the justices to invalidate votes cast by electors in the swing states of Pennsylvania, Michigan, Georgia, and Wisconsin. Today, House Minority Leader Kevin McCarthy added his name to a friend of the court brief. The Trump campaign has already lost dozens of court cases. Manhattan's district attorney is said to be ramping up his investigation of President Trump. Bloomberg's Nathan Hager reports.
Sources tell the New York Times state prosecutors have interviewed several employees of President Trump's lender, Deutsche Bank, and insurance broker Aon in recent weeks. It's part of District Attorney Cyrus Vance Jr.'s months-long effort to obtain President Trump's personal and corporate tax returns. It's unclear if Vance will ultimately bring charges, but any state action would be beyond the reach of federal pardons. In Washington, I'm Nathan Hager, Bloomberg Radio.
More money is going to victims of Ponzi schemer Bernie Madoff. The Department of Justice says it has recovered another $488 million and will hand that off to some of the victims. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much for that update. You are listening to Bloomberg Business Week on this Friday. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. You can catch him at 9 and noon. Just when you think your day is over, you're like, oh, I got to go do the radio stuff.
I love the radio. I'm having fun.
We love having you here. Really, really great. I don't know how much do you guys talk about Peloton?
We talk about it a lot.
It's kind of like I feel like there's a Peloton indicator to this year.
There is, and you know, it's interesting because when we first saw the vaccine news a few weeks ago, I think it was November 8th, but don't quote me on that.
Okay.
A company like Peloton pulled back significantly, right? Because consumer or investors were thinking, wait a second, if a vaccine is here, people are going to start going to gyms again. I mean, there was like a 25% pullback on that day, but the ride that they've seen this year has been absolutely wild, bringing CEO and founder John Foley into billionaire status because of the increase in the share value.
Who'd have thunk? And they were really, they just kind of leaned into it. They're up about 311% this year. This story on the Bloomberg by our Bloomberg Law team talks about how Peloton was hit with a proposed civil rights class action in a New York State trial court for failing to provide closed captioning to allow deaf or hard of hearing access to its application software. This is something that I feel like you have a company, you put it out there, you've got a product. They had to deal with music issues and licensing, and they've had to deal with that. That was kind of overhang before they went public. And I think things continue to come out where it's like, oh, yeah, we need to think about doing this.
As a company grows, it has to make sure that it's
inclusive
and accessible. The plaintiff, Philip Sullivan, alleges that he attempted to watch several videos on the Peloton app but couldn't comprehend the content of the videos due to their lack of closed captioning.
Yeah, so it'll be interesting to see if ultimately they added. I would think it would be a pretty easy thing to do.
I was just going to say that. I mean, at this point, adding closed captioning,
it's a programming
it's a
thing,
program.
right?
You pay the program, and they're able to transcribe it in real time.
And I will say that I feel like they are a company that seems to want to be inclusive, and they've been trying to figure out ways to kind of broaden their platform to other folks that maybe don't have the money to spend on the pricier bike. So
yeah, very easy fix here.
Yeah, I think so too. So stay tuned, but I think they'll fix it. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. S&P on track for a losing week. Looks like it'll be a loss of just about 1% this week. Has been a volatile Friday, though. Stocks paring losses as lawmakers pass that stopgap spending bill to avert a federal government shutdown, but gave no signals of an imminent stimulus deal. S&P down 8. That's a drop of 0.2%. We've got NASDAQ lower by 53 now, a drop there of 0.4%. Disney lifting the Dow. Disney shares trading at a record, up right now by 13.7% after talking about its streaming prospects. The Dow up 30, a gain now of 0.1%. 10 years up 5/32, 10-year yield 0.88%. Gold up 0.1%, 18.38 the ounce. A down Friday for crude. West Texas Intermediate down 0.4%, 46.58 a barrel, and Brent is at 49.97, lower today by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, we've just got about 11 minutes left in today's trading session. It is time for the drive to the close, getting ready to wrap up this trading week. We're off our lows big time when you take a look at the trading day, Tim. It's been kind of a funny day. Like, we kind of sold off a little bit, but not dramatically. But we've definitely bounced back here. But we're kind of overall a little changed.
Yeah, and I think investors taking a step back and thinking about stimulus or lack thereof, and when is that going to happen, if ever?
Like a little bit of a breather, and we'll see what happens over
Except
the weekend.
for those Disney investors.
Except for those Disney investors, or if you happen to hit one of the IPOs this week.
Yeah,
so let's
very
get
true.
Right. So let's get into it with Ryan Dietrich. He's chief market strategist over at LPL Financial. They've got $810 billion in assets under management. He joins us once again on the phone from Charlotte, North Carolina. Hey, Ryan, nice to have you back with us here on Bloomberg. So Tim and I are watching the markets. It's kind of a little bit of a mellow day, but it's been an interesting week. But I think we are on track for some losses for the week overall when it comes to the broader market and the S&P 500. How do you see the market environment right now? Are there any technicals kind of, jumping out at you at this point?
Yeah, Carol, thanks for having me back. But you're right. I guess markets, they don't go up forever, right? We're having a little pullback now. But let's not forget, we had over a 10% rally in equities just in November. And if you look at the market technical seasonality, the first half of December historically is actually kind of flat for stocks. Most people think, Santa Claus comes to town, December is always strong. The majority of the strength in the month of December tends to take place the second half of the month, and that's, kind of where obviously we're heading here fairly soon. But technicals are strong. I've been coming off with you guys for a while, saying there's a lot of participation. Technicals are strong. The one thing that gets me, I consider kind of market sentiment part of market technicals. Sentiment's awfully frothy. I know you guys have talked about all the big IPOs, the excitement that comes with those.
Right.
Put the call ratios, and here's the lowest levels they've been in decades. If you look at like the 5-day CBOE, put the call ratio, investor sentiment polls, we can go on and on. Markets can keep going up when sentiment's optimistic, but that does set a much higher bar for maybe a little bit of disappointment. And markets finally can pull back as people are a little too optimistic. We think that makes sense as we head into sometime early next year.
What is the political risk here? I mean, what are you watching for in terms of from Washington? It does seem like that there will be some sort of bill passed, but it's going to be smaller than I think the Democrats want. I mean, it's pretty much guaranteed. But what does it mean for what you're watching?
Right. Well, first off, Tim, nice to talk with you. But you're right. I mean, that's pretty priced in at this point, right? Some type of fifth stimulus bill is extremely priced in. I mean, we think it's going to happen, right? I mean, honestly, guys, we were talking about on August 6th, the summer recess, right? That's when we thought we were going to have this stimulus bill. Now here we are in the middle of December still talking about it. So it's going to happen. I mean, at the same time, it is politics. We're waiting on the runoff in Georgia, the makeup of Congress. At the end of the day, the truth of the matter is the Fed is still a major backstop. Fiscal stimulus is coming. The economy, obviously, the vaccine news is great. right? Economy's opening up. So all these things are playing in there. And just the fact that earnings are likely going to increase more than 20% in the U.S., 30% in emerging markets next year. Fiscal stimulus matters near term, but bigger picture, there's just a lot of tailwinds that do say, hey, things are still looking pretty good next year.
Hey, Ryan, I want to go back to Dave Wilson and his chart of the day because he talked about earnings estimates for the next couple of years, making U.S. stocks look more costly in historical terms than just 1 year's worth of projections or even past results. And he said S&P 500 closing yesterday at 26 times earnings. And he goes, it's close to the September 2nd ratio of 27.2. That was the highest since we saw some data being compiled by us here at Bloomberg, which goes back into 1990. So when you look at the valuation of the market, are you concerned when you look at next year's earnings estimates?
We're not super concerned. Is it something that we think, oh, this is like 1999, market's extremely overvalued?
Right.
I don't think so here, Carol. But I'll tell you what, look at emerging markets. I mentioned them a second ago. They're extremely cheap relative to the U.S. And you know what? Emerging markets are not above where they were in 2018. Emerging markets aren't even above where they were in 2007. You want to talk about a long base and a long time to kind of consolidate. We like the U.S. still, don't get me wrong, but in the models that we run for our more than 17,000 advisors, emerging markets are an area that we really think next year, from a globally diversified portfolio point of view, that could be an area that you really start to see some strength and outperformance, honestly, led by China. Nobody trusts Chinese data. I get that. But I'll tell you, there's a lot of positives. South Korea, Taiwan, China, there are some really good things happening, and that's places we're looking for investments next year. That are cheap, to be honest.
What does the recovery here look like? It doesn't look like this V shape. We're not going to have that. We know that. What do you look at?
Yeah, I mean, everyone wants the shape, right? We've been saying a swoosh-shaped recovery where it's easy off the initial surge. We saw that the last couple of months. Now it's getting tough. We're looking at initial claims just yesterday. There's going to be some sticky points here, but the truth of the matter is we just released our 2021 outlook. We called it Powering Through here at LPL Research. We think the U.S. can grow about 4% next year. Globally, probably 5%. Or again, earnings in the S&P can gain maybe about 20%, which should get us to a 165 multiple. And we've got a fair value target on the S&P of 3,900. Now, I know that's a little lower than what a lot of people have been laying out there, but honestly, I've been coming on with you guys where we've been bullish pretty much this whole time. And we think maybe now that everyone's starting to get optimistic here, that inner contrarian in us says, well, maybe let's pull it back a little bit.
Right.
But again, globally, my goodness gracious, the emerging markets are an area that, like I said earlier, is a lot of opportunity for investors.
All right, we're going to leave it on that note. Ryan, thank you so much. Have a good weekend. Ryan Dietrich, Chief Market Strategist at LPL Financial, on the phone from Charlotte, North Carolina. So kind of laying out his metrics and what he's watching. But I think it is a week, and I think you said it well, that it just feels like a day where we're going to just take a break a little bit, and maybe the week, because it does look like we're going to end lower for the week overall. I think investors are just kind of waiting to see if we pull something out of D.C. potentially that gives us some optimism that kind of helps shore up the economy, essentially.
Yeah, and I think like Ryan was saying, that it's kind of priced in right now. I think the big surprise would be if we continued not to get something as the end of the year gets closer and closer.
Yeah, exactly. I think that would certainly create some disappointment. I'm just going over to Airbnb and DoorDash because I wanted to see how these stocks are trading. So Airbnb, which was up, finishing up about 113% yesterday. It's down about 2.5%, so not a big deal. DoorDash, which was up almost 86% in its first day of trading on Wednesday, lost about 2% yesterday, and it's down about 6% today, which is to be expected considering the run. But it'll be fun, too, and interesting to watch what the trend line will be.
Yeah, the hard work is ahead for these companies. They have to live up to the expectations, and these expectations got lofty this week.
Yeah, and listen, both of them are pandemic plays, and I think some think that maybe we'll see who has the longer-term play post-pandemic, ultimately.
I don't know who it's going to be.
Yeah, I don't know. People have been saying, I think, DoorDash, because they're so, in terms of market share and cemented in food delivery, but who knows?
Yeah, I mean, maybe people are going to be traveling and living in different places. Airbnb could benefit.
Exactly, exactly. All right, stick around, folks. We've got just about 3.5 minutes left in today's trading day.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and in Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Friday, December 11th, and it is on to the weekend. Also on to the second half of December. Folks from Infosys Systems virtually ringing that closing bell. A volatile day, mixed session. The Dow higher, S&P, NASDAQ both lower. Stocks paired losses as lawmakers passed a stopgap spending bill to avert a federal government shutdown, but gave no signals of an imminent stimulus deal. Right to the numbers, S&P down 4, a drop today of 0.1%. Losing week, by the way, the Dow up 46, higher by 0.2%. NASDAQ down 27, a drop there of 0.2%. 10 years up 5/30 seconds, 10-year yield 0.88% this Friday. Gold up 2.59, the ounce up 0.1% to 18.39. West Texas Intermediate crude down 0.4%, 46.59 a barrel. So turned out to be a losing day for the S&P 500 index. As for the calendar, and as for the market backdrop, Ryan Dietrich is Chief Market Strategist at LPL Financial. He was our guest moments ago right here on Bloomberg Business Week.
The first half of December historically is actually kind of flat for stocks. Most people think, Santa Claus comes to town, December is always strong. The majority of the strength in the month of December tends to take place the second half of the month, and that's, kind of where obviously we're heading here fairly soon. But technicals are strong. I've been coming up with you guys for a while, saying there's a lot of participation. Technicals are strong.
After yesterday's surge, a down day for Airbnb, spent much of the session higher, but ended the day down 3.8%. DoorDash, which also went public this week, lower today by 5.9%. Disney shares at a record after issuing a bold forecast for its new streaming services, lifting the Dow. Today, the Walt Disney Company up by 13.6%. Again, recapping equities mixed. S&P down 4, lower by 0.1%. NASDAQ down 0.2%. The Dow Jones Industrial Average and up Friday, up 46, up 0.2. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everyone, let's take a little bit of a deeper dive. Charlie breaking down those closing numbers. Carol Master along with Tim Stenovic here on this Friday. So S&P 500, Tim, a little bit of a more risk-off trade today. 191 names in the S&P 500 higher today, 309 lower, 5 unchanged. If I look at the 11 major industry groups, 7 were higher. Oh, wait, this is wrong. This is a year-to-date. Hang on, one day. Okay, here we go. So 4 were higher. That makes more sense. Communication services atop that list, up about 1.2%. Bottom of the pack, energy down about 1.2%. But it was a wild week where we know Disney today, or you take a look at some of those IPOs where you saw some really mega outperformers.
Yeah, some familiar names in the best performing stocks today. Disney up more than 13%, finishing the day there. Yeah. Etsy higher by 2.7%. UPS higher by 2.5%.
Yeah, which is really, kind of impressive. Let's bring in Bloomberg News asset reporter, cross-asset reporter, Sarah Ponzek. She's on the phone in New York City. So, Sarah, where should we begin?
What a week it was. But it's interesting because we talk about still the optimism, the sentiment that we are feeling in the markets. However, if you look at your major benchmarks, you still saw the S&P, the NASDAQ finishing lower on the week. One benchmark, though, that did continue its gain was the Russell 2000, higher for a 6th straight week. And not just higher for a 6th straight week, which would be the biggest winning streak since early 2019. But this comes after November, which was the best month ever for small cap stocks by way of the Russell 2000. So pretty staggering that we continue to see that. But still this discrepancy. When you look at the major benchmarks, taking a break, a calmer week, you would say, at the headline level this week. But you look underneath the surface with Airbnb and DoorDash, you name it. Disney today, unbelievable. The surge that we saw at 14%. I mean, it's interesting to call it the least.
What do you make of Disney's move today?
So when you look at Disney's move, I'm not sure some would say that you look at the forecast they gave in streaming and would say it warrants possibly a 14% move in a company that is already was about a $300 billion company when it comes to market cap. And I was just doing a little bit digging on the terminal. I'm able to look at options trading volume in the stock. And just to give you a sense, today we saw 944,000 Disney call options trade. Now, the average over the last 20 days was 82,000. So we saw 12 times the average number of call options that have traded over the past 20 days trade today. So we talk about, some would call it froth in the market, this extremely active options market. Just before Thanksgiving, we saw record call options over the past 20 days leading up to then. We had seen the highest 20-day average of call options trading. Well, it doesn't seem as though it's quieted down, and you see that really asserting itself in Disney shares today.
Does it indicate that investors to you are still more bullish on Disney as a result of what they heard late last night?
It would seem so. I mean, if you're buying a call option, you're betting that Disney stock's going to rise into the future. So that's not 944,000 people, but people buying 944,000 calls. It really is incredible to see, especially ahead of next week, which is going to be a very busy week, although I feel like we all have a different meaning of busy now in the year of 2020. But we have
Aren't they all busy?
They're all busy. They are. But
you're right. We do have
a year in itself.
That's a good point, though, Sarah. Looking ahead to next week, we do have that Fed meeting.
We have a Fed meeting, which is very largely anticipated, just whether or not the Fed is going to say anything or do anything by way of its asset purchases and WAM, weighted average maturities, if they're going to move further out on the yield curve. In addition to that, on Friday, we've got a quadruple witching, and we've got the rebalancing of the S&P 500 and the NASDAQ. Today at 5:15, we're supposed to get the announcement of which company is going to replace Tesla, even though there is a lot more than one company that is going to be going on in this reshuffling. But there's a lot to look forward to next Friday as well.
Yeah. Here's my question.
Are you sure?
Yeah, I mean, here's my question, because if we're talking about a busy week, do lawmakers, are they really considered busy if they're not actually getting anything done in terms of stimulus?
And just got about 30 seconds here, Sarah.
I'll keep it quick. Well, I'm not so sure when I say busy. I wasn't even thinking of the odds of a fiscal package or fiscal stimulus. At this point, the will they, won't they argument, the back and forth, yes, there have been hopes of a fiscal deal, but there have been hopes of a fiscal deal for months now. So what's a couple more days? What's a couple more weeks?
Unless you're one of those people who needs the aid, right? Sarah Ponczak, I hope you're feeling well. Take care of yourself. Sarah Ponczak, Bloomberg News, cross-asset reporter. Sarah Ponczak on the phone in New York. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson! Hey, Mr. Wilson. Stock of the day. Ticker is JOUT. J-O-U-T. What do you got for us, Dave?
I've got Johnson Outdoors, Carol. It's a maker of equipment used by campers, boaters, fishers, and divers. The company was founded in 1970, went public in 1987. Now, those shares with that ticker, J-O-U-T, set a record in August 2018 and have been up and down since then. Johnson Outdoors is overlooked by analysts, kind of like yesterday's stock, StoneX Group. Data compiled by Bloomberg on Johnson Outdoors shows no more than 2 firms have covered the company since 2003. Now there's only one, Sidoti & Company. So today, Johnson Outdoors released fiscal fourth quarter results. Earnings amounted to $1.53 a share. Sidoti only expected 80 cents. And revenue rose 58%, thanks largely to coronavirus-driven growth in demand. Johnson Outdoors said in a statement that its fourth quarter usually comes in, quote, a ramp-down period for its industry. Not this year. And as a result, Johnson Outdoors rose as much as 13.5% to its highest price since September 2018. And the shares closed with a gain of 5.8%.
Yeah, that makes sense. Have you been buying a lot of outdoor equipment and stuff, or what?
We haven't, because I think we have such a young kid, and we're not, we're not sort of spending time outdoors.
You're not climbing mountains with your son?
No, we're not. But we would be if it were a different time in our lives.
Yeah, exactly. No, listen, it's just interesting to see the trends that come out, right, of the pandemic. Dave Wilson, first of all, thank you so much. Have a good and safe weekend. And I'm going to say goodbye to you. Have a great weekend.
Thank you. You too.
Have a good one. We'll see you Monday.
I'll be back on Monday.
It's been a good week. Really good week. Thank you.
Thank you.
All right, Tim Stanovic, a Bloomberg Quick Take. Right now, though, we do want to do some world and national news. For that, over to Denise Pellegrini in our New York newsroom. Hey, Denise.
Hey, Carol. Thank you. Well, final approval of Pfizer's coronavirus vaccine could happen any minute now, or maybe not. According to a source, the White House Chief of Staff Mark Meadows says Commissioner Stephen Hahn's job could be on the line if he doesn't do it soon. Dr. Ian Lustbader is Chief Professor of Medicine at NYU Langone Medical Center, and he told us earlier today pressure from the White House is not a positive.
You have to let the FDA evaluate it, which they did. The vaccine data is very good in terms of efficacy and hopefully lives to be saved. And side effects are low, not zero. So to me, it's certainly unnecessary to threaten or cajole the FDA.
Now, President-elect Joe Biden weighing in on all this. He says the White House should be doing more to protect people.
This week marked another tragic milestone in our fight against COVID-19. More than 3,000 deaths in one single day, the highest single death count during this pandemic. We're in the teeth of a crisis right now, and this nation needs presidential leadership right now. Presidential leadership that is willing to model the steps we should be taking to save our own lives and lives of our families.
And indoor dining is being banned again in New York City. Now, that is effective Monday as COVID cases rise. And sources say prosecutors from the office of Manhattan DA Cyrus Vance have interviewed employees of Deutsche Bank and insurance broker Aon. This is in connection with their investigation of the Trump Organization. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Appreciate that update. You are listening to Bloomberg Business Week. I'm Carol Masser at Bloomberg headquarters, and also joining me is Charlie Pellet of Bloomberg News. And just want to mention a headline, the head of Operation Warp Speed saying that the FDA may approve the Pfizer vaccine today or tomorrow. And Charlie, you know, you've been tracking, like the rest of us, some headlines about whether or not the Washington Post talking about some pressure on the head of FDA to do it today. He's saying no, but we are anticipating some kind of approval coming out of them for that emergency usage.
Indeed, great reason to keep it locked into Bloomberg Radio. Yes. Can we talk about fashion? Can we talk about perhaps yoga wear?
A man after my own heart.
You know, and one company that comes to mind whenever we say yoga wear, especially upscale, is Lululemon.
You say it so well. Stock was down, though, about 6.7%. But, you know, it's funny because they've been having a good year. It's up almost 49% this year because, listen, everybody's staying at home. They're wearing a lot more yoga gear, but I guess not so much.
Exactly, and possibly a shift in strategy here, according to our Kim Basine. Lululemon, the founder, once body-shamed women on live TV, but now the company has determined that offering larger sizes can pay off. And why not?
Listen, it's all about being inclusive, and why not? It's terrible that, you know, listen, body shapes, they come, or bodies, I should say, come in all shapes and sizes. So Lululemon, which is an upscale yoga wear maker, I mean, listen, this is also a way to, grow your market share as well. So it's something to think about. Sales of women's garments, I do want to point out, up 22% last quarter, and that was reaching some pre-pandemic growth levels. So, I mean, the numbers that they came out with yesterday, I think, were pretty upbeat and pretty positive. But you're right, this is a strategy story.
Indeed, and also, too, in terms of widening the product range, a CEO once said the range of Lululemon was so narrow that many pro athletes couldn't wear Lululemon's leggings.
Well, listen, and we just remember that major faux pas a few years ago. But we're not even going to get into that because I think we all remember it well. Anyway, cool story. Thanks, Charlie.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet, developing Story, a group that includes private equity firms Apollo Global Management and Blackstone Group, is in talks to acquire Wells Fargo's student loan portfolio. This, according to sources. Wells Fargo shares down today by 1.4%. It was a down Friday here, losing week as well. S&P on the week down 1%. Stocks paired losses today as lawmakers passed a stopgap spending bill to avert a federal government shutdown, but gave no details of an imminent stimulus deal. Volatile session with the S&P down 4, pairing losses down 0.1%. Nasdaq down 27, a drop of 0.2%. Dow had an up day. Disney lifting the Dow. Walt Disney shares, by the way, at a record today. The Walt Disney Company up 13.6%. The Dow up 47, a gain there of 0.2%. 10-year up 4/30 seconds. 10-year yield 0.89%. Gold up 0.1%, 18.39 the ounce. And West Texas Intermediate crude down 0.5%, 46.56 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So we've been keeping an eye on Apple. Stock was a little bit lower today. It is, though, on quite a run this year. It's up about 67% here in 2020. We had a lot of Apple news this week. We talked about the new headphones, and if you're only finding out about it today, probably too late to order and get before the holidays. Meantime, on the Bloomberg online, also at Bloomberg.com, story about Apple CEO Tim Cook and what he's saying about his company's staff and about working from home. There's a lot of news, so let's get to it. For all things Apple, we turn always to Bloomberg News technology reporter Mark Gurman. He is back with us on the phone from LA. It's been a busy week with Apple news. Is it always?
Apple, yes, it is. It is always. This is a 7-day-a-week, 24-hour gig, to tell you the truth. But yeah, it's a busy week. We started off with these headphones. We had a scoop on Monday about Apple developing new processors for next year's Macs that are going to outpace the highest ends of Intel's offerings. And then yesterday, we broke the news that Tim Cook and the executive team held a town hall company-wide meeting with the employees where they discussed a number of things, including their plans for new cellular modems, which I'm sure we'll discuss, as well as the return to work schedule for next year.
Well, let's talk about it. Let's just go right to the obvious, since we've talked a little bit about we've talked a lot about the virus today. Working from home, they're going to be there till next year.
They're going to be there till next year. So what he told employees was most people are going to not return to the office before June 2021 in most major offices, including their Cupertino headquarters. Next year.
But he wants people back ultimately, correct? I mean, I'm just thinking about that massive new headquarters that they just built. I mean, and the culture of Apple, I'm assuming ultimately he wants people back.
Yeah, they spent billions on this headquarters. They have a lot of their company at stake in terms of their secrecy and, the in-person collaboration, right? What he did say, however, is there's some things they've learned from working from home that they're going to be able to take with them. So my bet would be they don't move to sort of a permanent work setup, permanent remote work setup that Facebook and others are going to try over the next 5 to 10 years, as they announced. But they're going to offer a little bit more flexibility, perhaps, to be able to put in a work from home day, once in a little while, or a little bit more flexibility there. But I don't think the overall company will change.
What about, though, I do think about the guys who are engineering and working on products. Do they, what are we hearing about that? I'm assuming that those guys, it's a lot easier when you're working on some of this stuff when you're back at Apple headquarters. Because, man, Apple is leaning in bigger and bigger, the story about the modems, the story about new processors. I mean, they are just leaning into all of this big time.
In terms of the engineering work, they weren't there when things really kicked off with coronavirus into March and April, because everything was so uncertain.
Right.
But in terms of, at this point, they've been back for a number of months now. They don't come in every day. They have certain people coming in at some days, right? So maybe you're working Monday, Wednesday, Fridays in the office, and Tuesdays and Thursdays from home. So they've sort of balanced it out, sort of maybe like an A team and a B team and a C team. They're coming in at different times, so you don't overlap with other groups, right? So there's going to be some people that only come in at the same time consistently as another group of people. So if someone has the virus, it's sort of a contained group of people that that you were exposed to.
Right.
So they are taking every precaution in that sense.
But talk to us a little bit about some of the stuff on the engineering and design side when it comes to, you mentioned the story that you and Ian put out earlier in the week, a Bloomberg exclusive. It was great about Apple planning a new series or series of new Mac processors. And I guess they're expecting for it to come out as early as next year. And it's really aimed, as you guys wrote, at outperforming Intel's fastest. I mean, they've been talking about this, working on this for a while, but it sounds like it's getting a little bit more real.
These are chips that were designed upwards of, 1 to 2 to 3 years ago at this point, right? Yeah. And so we're at the point where they basically just need to put these things in production. Personally, I don't think we're going to see the true full impact of the coronavirus on Apple's product development schedule for at least, 1 to 2 years from now.
Okay, so not for a couple more years. What about this modem, their own cellular modem? What's the significance of that?
So the cellular modem is arguably the most important piece of technology in any phone or device that connects to cellular networks. It is the chip that allows you to make phone calls and receive phone calls and connect to the internet when you're not on Wi-Fi. It's the chip that allows us to be having this conversation right now. Mm-hmm. And so Apple sources that part currently from Qualcomm. And what Johnny Srouji, the head of chips for Apple, told staff in the all hands yesterday was that they have started development of that chip this year. And they're on track to do that key transition in the future.
So really interesting. So of all the news that was here this week, what stands out for you that you think investors need to take the biggest notice of?
Well, I mean, I think the investor reaction so far has been the strongest on that modem, right? I mean, Qualcomm shares dipped nearly 8% today after dipping 6% after hours yesterday. So clearly Qualcomm investors are sweating a little bit about this. I think the processors is also significant. It certainly made, Intel investors sweat too. The stock went down a few percentage points then as well.
Yeah.
And the AirPods Max, the new AirPods headphones, I mean, just another, piece of evidence that Apple's trying to create sort of this empire of accessories that could hurt other audio makers and, strengthen their ecosystem. But of course, we can talk about this another time, but $500 plus is a lot for a pair of earphones.
Well, just got 20 seconds. You try them. Do you like them? Real quickly.
So they don't ship till next week.
Oh, so you
I don't have much to say on them yet, but let's talk again next week and I'll give you all my feedback.
All right, deal. We'll look forward to it. Hey, Mark Gurman, thank you so much. I know it's been a crazy, crazy week for you. They're always crazy. He's got so much going on when he's covering Apple. Tech reporter at Bloomberg News on the phone from Los Angeles. Check him out on Twitter at Mark Gurman. All right, for those of you listening in New York and San Francisco, also watching on YouTube, Bloomberg Business Week, we're going to come back. If you are listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next, summing up all of the day's big news out of the nation's capital. You're listening to Bloomberg Business Week. I'm Carol Massar, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser at Bloomberg headquarters in New York City. So listen, we know nurses, healthcare workers, they've all been taking care of all of us during this pandemic. We need to make sure that they are cared for, both their physical and mental well-being. We're going to talk about that with the CEO and co-founder at Incredible Health. She's back with us, Dr. Iman Abuzaid. So we'll get to her in just a second. First up, though, some of your top stories on this Friday. Here is Charlie Pellet.
Thank you very much. I do want to begin with a headline from the Bloomberg Professional Service relating to vaccines. The U.S. government exercising an option for an additional 100 million doses of Moderna's vaccine. Shares of Moderna after hours, they are advancing now. Checking the stock, it is up now by 3.4% on that word. Stocks losing Friday, losing week as well. Stocks did pair losses as lawmakers passed a stopgap spending bill to avert a federal government shutdown, but gave no signals of an imminent stimulus deal. A volatile session today, but the S&P ended the day down 4, a drop of just about 0.1%. NASDAQ down 27, a drop there of 0.2%. Dow Industrials getting a big lift from the Walt Disney Company. Disney shares surging today. They are at a record, up by 13.6% on its streaming outlook. The Dow up 47, higher by 0.2%. 10-year yield is 8.89%, up 430 seconds. Gold up 0.1%, 18.39 the ounce. And crude West Texas Intermediate down 0.4%, 46.58 a barrel. Well, as for what has been driving markets, Christina Hooper is Chief Global Market Strategist at Invesco Advisors, and she was interviewed this morning on Bloomberg Television and Radio.
If we think about the key drivers for this environment and the key drivers for equities, it's certainly the Fed, but it is also that we have an effective set of vaccines in the offing that are going to be broadly distributed in 2021.
Tesla shares lower today. Tesla moving lower by just about 2.7% after being downgraded to a hold from a buy at Jefferies, which wrote that the electric vehicle maker is, quote, in a league of its own, but that it won't be able to dominate the auto industry given its structure and politics. Apple has started building its own cellular modem for future devices, a move that would replace components from Qualcomm. That, according to Apple's top chip executive. Apple shares down today by 0.7%. Recapping, S&P down this week by 1%, lower today by 4 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with a Bloomberg Business News Flash. I do want to get back to the virus and what members of our healthcare community are seeing to deal with it and how they are also taking care of their own members. Great to have back with us Dr. Iman Abuzaid. She is CEO and co-founder at Incredible Health. And just a reminder, her company connects hospitals with nurses and other healthcare workers. So they have been on the front lines from day one of this health pandemic. She joins us once again on the phone in San Francisco. Dr. Abuzaid, nice to have you back with us. How are you doing?
Yeah, thank you so much for having me. Yeah. I'm pandemic good.
You're pandemic good, I know. Well, but San Francisco has been in lockdown for a while here still.
It has, yeah.
Yeah. Tell us about your teams and what you're seeing right now in terms of COVID cases and how they're dealing with it. Because it's one thing to have to go through this once, but now that we're dealing with, second and multiple waves here, it becomes really difficult for everyone involved.
Yeah, so we have a rapidly growing career marketplace for healthcare workers, and what that means is, the hospitals that are using our platform to hire permanent nurses, as well as the nurses that are using the hiring platform, as well as our many additional services, they're in the eye of the storm, right? Like they're in the middle of the COVID pandemic, and they are certainly on the front lines of it. And what we're seeing it's actually evolved since March and April. So on the hospital, in terms of hospital leadership and hospital executives, seem to have gotten more of a handle actually on how to cope and manage through COVID. A lot of them have resolved the personal protective equipment shortages. A lot of them have infection control protocols in place, and are trying to do whatever they can to support their employees. And then on the nurse side, just the burnout and the stress is really starting to set in now. as you know, nursing is a profession that has an intense amount of burnout and work even before the pandemic, and the pandemic has just really exacerbated that.
Yeah.
And so we are seeing quite a bit of fatigue out there.
Well, so how are you dealing with that specifically? Because I do wonder, is that fatigue leading to workers who cannot work, or is it with some support that they are able to continue? I mean, there is a point where I'm sure that you guys look at your teams and say, you know what, you got to take a break. You just have to.
Yeah, absolutely. So, there was a very interesting study done by the team at New York Presbyterian. And this is a published study that was done in April 2020 when New York was going through its big peaks. And it showed that the nurses were expressing some of the highest levels of stress. 64% of them were reporting symptoms of acute stress, which ranges from, nightmares and inability to stop thinking about the virus. So this is pretty challenging mentally to cope with COVID. And what the impact that's having is, certainly burnout and stress, and then also the retention rates are dropping at some hospitals. Like in other words, hospitals are losing nurses, right? Just simply from burnout, and which is making the staffing shortages even more challenging. It's a pretty tough time right now.
Well, and I think that was one of the concerns, right? That as we start to see numbers increase, that there was concerns about, first and foremost, healthcare workers getting sick and once again exposed to the virus. And then there's, this burnout concern and then ultimately concerns that there wouldn't be enough people to take care of those that were in hospitals. I mean, are we seeing anything approach that levels or not yet?
We are. So even before the pandemic, the U.S. was already in a nursing shortage, right? And a healthcare worker shortage, because our demand for healthcare as a country keeps going up. Our population is aging, and we just simply don't have enough workers in the system. Now, the pandemic certainly added stress to that system in terms of shortages. And in the early days of the pandemic, when COVID was, for example, only focused on the Northeast, there was an ability to move staff around, and there was some flexibility there. But now, now December 2020, where COVID is impacting almost every single state in the country, is seeing community spread. You don't have that option of moving nurses around the country anymore, and nearly everyone we are working with has reported pretty significant shortages, staff shortages.
Wow, that's a real difference. And I don't know that we've heard that before, but certainly if you look at the numbers or if you look at a map and you're reminded that, you're right, it's very different from what we saw in the spring where it was very concentrated here, certainly in the New York metro and the Northeast overall. But you're right, the cases are all over. And so it's really pushing and straining healthcare systems all around the country. Iman, wait, just hold on for a second. I've got to do a little bit of news, but I do want to come back to you because I am curious about, from what I understand, you guys are announcing some products that are really helping support nurses and certainly those that are feeling some strains and stresses. So we'll get into that in just a moment. We'll come back to the CEO and co-founder at Incredible Health. Right now, though, another check on world and national news. And right now, back over to Denise Pellegrini. Hi, Denise.
Hey, Carol. Thank you. Well, California just reporting a record 35,468 new COVID cases. That's in the latest 24-hour period. We're waiting for a possible final approval from the FDA of that Pfizer coronavirus vaccine. The decision could be imminent, or it could take a bit longer. A vaccine is widely believed to get approval, but we'll see. Illinois Governor J.B. Pritzker reminding people even when the vaccine does arrive, those first shipments will be prioritized.
We're only able, right in these early weeks, to service and provide the vaccine for healthcare workers and for those in long-term care facilities.
Oregon Governor Kate Brown says they're standing by to start administering vaccines.
By the end of December, Oregon expects to receive 147,000 doses of the Pfizer and Moderna vaccines.
Now, in Australia, they are halting production of a locally made COVID-19 vaccine there. Australia 10 says that's after volunteers in the trial falsely tested positive for HIV, and they attribute that to antibodies caused by the coronavirus vaccine. President-elect Joe Biden continuing to piece together the cabinet that'll staff his White House, officially nominating several key players to posts, including Ways and Means attorney Catherine Tai to be U.S. Trade Representative.
A trusted trade expert, a dedicated public servant who knows government, and has spent her career leveling the playing field for American workers and their families.
And here in New York, Governor Cuomo banning indoor dining again at New York City restaurants. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Charlie Pellet of Bloomberg News. Just bring on the cookies. Bring on the brownies already.
Exactly. Let's put that in context. We got two squabbling neighbors here, and we can talk
Not
more
just
about
any neighbors.
Okay, fair enough. And I think the remark that I made last week was, can't you just try to get along with your neighbors? And I suggested bringing them a plate of fresh brownies or chocolate chip cookies made by Carol Massar. But that's not what. And I thought we almost were close to a settlement. We're talking about Bill Gross here.
We are, and his Laguna Beach neighbor, Mark Tofik. Tofik is a tech entrepreneur, and they've been locked. The two of them have been locked in a public feud for months. Tofik claiming it started when he filed a complaint with city officials over Gross's installation of protective netting over $1 million sculpture in Gross's yard. So what Bill Gross has been doing was playing, what was it? Oh, Gilligan's Island, right? The theme to Gilligan's Island, really loudly.
Exactly, and it's not without precedent, because that's where this Bloomberg News story by Patricia Hurtado is going. Today they brought in a loud noise expert. Now this is somebody that looked back to the experience of trying to get former Panamanian dictator Manuel Noriega to leave an embassy and surrender.
Right.
And in that case, what they did was they brought out these huge speakers and played music there, trying to get him out. Noriega, I might add, was holed up for days there. The song list included Christmas music, Danger Zone by Kenny Loggins, and the expert basically had to back down today, saying that, maybe there are similarities, but the two are not so similar with what's happening with Bill Gross.
He was saying they were much louder speakers that they were doing with Noriega. I just love, what if Noriega liked Kenny Loggins? And he was like, yeah, bring it on. I guess he didn't, though.
No, but, could you say the same thing with a neighbor saying, hey, I love the theme to Gilligan's Island, just a 3-hour tour?
I'm guessing probably not, which is why they're in court. But anyway, the case goes on, and I know we're having some fun because it is just kind of funny how really wealthy people sometimes fight over things. Anyways, bring on the brownies, bring on the cookies, as Charlie Pellet says. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Developing story, Oracle says it is moving its headquarters to Austin, Texas, from its home state of California to give employees more flexibility on where they do the jobs. The move to Austin from Redwood City, quote, means that many of our employees can choose their office location as well as continue to work from home part-time or all of the time. That statement today from Oracle. So Oracle saying goodbye, California. Hello, Texas. You recall recently Elon Musk said he's heading to Texas. Stocks paired losses as lawmakers passed a stopgap spending bill to head off a federal government shutdown, but gave no signals on an imminent stimulus deal. Volatile day with the S&P down 4, a drop there of 0.1%. The Dow up 47, higher by 0.2%. Disney lifting the Dow. Disney at a record, up by 13.6%. NASDAQ slumped 27, lower by 0.2%. 10-year up 4/30 seconds. 10-year yield 0.89%. Gold up 0.2%, 18.39 the ounce. And crude, West Texas Intermediate down 0.4%, 46.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Do want to get right back to our guest, Dr. Iman Abuzaid. She's CEO and co-founder at Incredible Health, still with us on the phone from San Francisco. So we talked about some of the stresses, Dr. Abuzaid, that you're seeing on nurses and healthcare workers right now. So what are, and you know, it's interesting, I think we've talked about it before, and we certainly have had on a fair amount of guests and other CEOs who just talk about workers in general have seen, I think it was one of the unexpected outcomes of the pandemic, right? We understood the health impact, but also the mental impact and the importance of our mental well-being. I feel like it has just escalated in terms of conversations and actions and understanding that we need to make sure that this is a priority really in our entire society. But I am curious about what you guys have done to support the healthcare workers and nurses in your community.
Yeah, so, you know, our mission at Incredible Health is to help healthcare professionals live better lives and help them find and do their best work. And, you know, Incredible Health is not just a place where they find, you know, a permanent job in 20 days or less, but it's also the place where they manage their career and are able to interact with their peers. And so what we've built and just announced earlier this week is the Incredible Health Nurse Community. And what that is a free online community built exclusively for nurses. Where they are, and it's a safe place where they can support each other and give each other advice, and you know, and that's on many topics. Everything from what we've seen in there is, you know, transitioning between specialties, dealing with workplace stress, and even fun topics like, you know, what are your favorite scrubs brands? The unique thing about it is that they can even post anonymously too. And it's just a place for them to really, you know, give each other advice and support. And there is no safe place for them to do that online today. And so we wanted to create that.
That's really interesting. So almost like a blog or a place to go, as you said, to talk about some really serious issues, but also just talk about, you know, whether, you know, just ways of kind of getting by and doing your job in this kind of environment.
Exactly. It's a social network. And then the other thing that we added is a digital journaling feature, right? So studies show that when nurses do written reflection at the end of their day, it can have a positive impact on their ability to handle stress, burnout, you know, trauma, fatigue. And so we were like, okay, let's digitize this. So they can use the Incredible Health iOS, Android, and web app, and you know, basically document and take an inventory of their emotions in these structured daily prompts. And that's to help them, you know, process stress more effectively. And so both of those features are 100% free. They're available to every single nurse in the country, and you know, and available in our apps and on our website too.
How much activity are you already seeing on both of them?
Quite a lot, actually. I mean, I think there's been thousands of nurses that have used the Incredible Health Nurse Community, the social network. It has been live for many, many months, and we've only just publicly announced it a few days ago.
Well, what do you think in terms of some of the longer-term trends or realizations or thinkings about kind of the healthcare sector? What stays with us, do you think, post-pandemic?
I think, look, healthcare workers pre-pandemic were overworked, underappreciated. I don't think the overworking is going away anytime soon, but I would hope the appreciation for them does increase. There's been a lot of visibility on them during the pandemic, and I hope we just don't forget this. This is a group of workers that is critical to our economy and critical to our country, and we should be doing whatever we can to give them, as much appreciation and support as possible.
Yeah, I just do think about, whether there's procedures, processes that make it kind of easier so that healthcare workers, can just focus on, caring for patients and others, and I just wonder what are the things we're learning about that. I mean, and we've talked about, I think, telemedicine and telehealth. Like, I do feel like that's here to stay.
Yeah, 100%. I mean, we've seen a few specific examples in our area is, during the pandemic, we launched this pandemic hiring suite, and, every hospital is now embracing remote interviewing, right? And remote onboarding and automatically scheduling interviews. And that has accelerated the hiring process on our platform from an average of 25 days before the pandemic to just 12 days today. And I don't see that going back to what it was. I think they have embraced these new workflows that are driven by technology in order to operate more efficiently.
Yeah, as everybody says, once you start doing something for several months in a row, it's a habit that's going to be hard. And this is too for consumer trends. Like, these habits aren't just going to go away. Hey, you guys have been growing amid all of this, and you've entered into some new markets or health systems, I think in Florida, Maryland, Colorado, Nevada. So you've been, amid all of this, expanding the business. Tell us a little bit about that.
Yeah, we have been. Our home state's California, and then we had added. We've expanded in Texas and Florida, and just announced a few days ago launching in Florida, Louisiana, Maryland, Iowa, Colorado, and Nevada. I'm very excited about our geographic expansion because we want to bring the incredible health, vision and the career platform of and enable hospitals and health systems to hire permanent nurses as rapidly as they can. We wanted to make sure that we had a whole variety of states that we expand in. This is not just a platform that's for the coasts, right?
Right.
We want to include the middle of the country as well. We want to include the South. And we're hoping, and our geographic expansion will continue over the next 12 months.
Well, and it's interesting. I mean, would you, is the expansion as a result of what's going on in the pandemic, and you just kind of stepped up some of your expansion plans? I'm just curious how that impacted it.
So we had raised our Series A, like over $17 million of capital in 2019. So there was always, expansion plans were always in the works. And yes, but the pandemic has accelerated it. Just because the shortage just keeps getting worse and more intense.
Yeah, and I do wonder too, you talk about the shortage, just got about a minute left here. I mean, what do we do to address this? Because, man, we're all going to need more healthcare workers going forward, especially as we have an older population, aging population, people are living longer.
Yeah, so we certainly need to educate more healthcare workers, right? So whatever it takes to make it as cheap and as free as possible to become educated as a health and trained as a healthcare worker is going to be critical. That's one of the reasons we offer free continuing education to every single nurse in the country. And the training needs to increase too. So even after nursing school is done, there needs to be an expansion of the training programs for nurses. It's
simple, but it's sometimes hard to get it all going, right? And just get more people kind of into the pipeline here. Iman, thank you so much. Dr. Iman Abu Zaid, she's co-founder and chief executive officer of Incredible Health, joining us on the phone from San Francisco and really just talking about some of the strains and stresses that are certainly on our healthcare community and nursing community. And as she said, during March and April and the springtime, that with the pandemic so centered on the East Coast, that healthcare professionals were able to kind of move around the country and go where those strained healthcare systems were to help out. But now, when you're seeing virus cases around the country, it's much more difficult, and that is really putting a strain on the availability of the necessary healthcare workers needed to really address the situation, the specific and current virus situation. All right, you're listening to Bloomberg.